Hello all. I was waiting for 5 p.m. precise time in Paris. Good evening. Hello, Jean-Zeb. Hello, Dapo.
Hi, Cindy.
Hi. Good evening, all people joining us. Everybody. We are waiting for just a couple of minutes to begin, because people are still coming in. Okay, let's begin. I propose we begin. So I'm Cindy Elalouf. I'm the CEO of the French consulting firm CIT Consulting. And today I am pleased to interview two experts in regulations from GA1 and Partners. First of all, I would like to introduce you to Jean-Zeb Awan, who is the founder and the CEO of GA1 and Partners. GA1 and Partners is the leading GRC consulting firm in the Middle East and North Africa, region. Jean-Zeb is also the founder of Azaco, which is a RegTech company supporting financial services firms with their compliance technology needs, and there are many needs. Jean-Zeb is also chairman of the Middle East, Africa, and Asia Crypto and Blockchain Association. Jean-Zeb has previously worked as the head of compliance of Morgan Stanley, EMEA, MENA, presence, and prior to that, he was head of compliance for Emirates NBD. Finally, at the end, but in the beginning, Jean-Zeb graduated with a Bachelor of Science and received a magna cum laude from the University of Arizona.
Thank you, Cindy.
Is it complete, Jean-Zeb?
Yes, thank you very much. Very complete.
Okay, good.
Makes me sound very old.
Great. Then Dapo. Dapo is a partner and the CEO deputy of GA1 and Partners. Prior to joining the firm, he was an executive director with UBS in the UK within their compliance division. Dapo has previously worked with the UK's financial services regulator, the FCA, famous FCA, and has also held senior position with Lloyds Bank. Dapo has a bachelor's and a master's degree in economics and an MBA from Imperial College Business School in London. He is an associate member also of the Professional Risk Manager International Association.
Thank you, Cindy.
Thank you. We are very lucky to have you tonight, both of you, and to have a precise and interesting, I'm sure, view and many informations regarding what's happening in these countries that are very attractive. And we have many things to ask you, I think, but I have organized a few questions. For all the participants, thank you all for being with us tonight. We propose to have a 30-minute discussion with Jean-Zeb and Dapo. I have prepared a few questions for them. And if you have questions, we will have 30 more minutes after the first presentation. So don't hesitate to use the Q&A bar that you can see, and you can type your question, and we will answer to this question at the end, okay, after the 30 minutes presentation. Thank you. So to begin, to begin, maybe a question for you, Jehanzeb. Today there is a lot of interest in the UAE, and can you shed some light on the UAE as a country and the various regulatory regimes in place?
Okay, wonderful. Thank you very much for this question, Cindy. Really appreciate the introduction. If you allow me, I will share my screen. I think the participants can then follow through with us. Just bear with me. I'm trying to do that. So here we are. Just bear with me. Okay, are you able to see the screen?
Yeah, perfect. Thank you.
Okay, wonderful. Thank you for the question. Really pertinent and important question in terms of how the UAE is set up and what are different regulatory regimes. The idea of our presentation is to get into the more practical aspects of it, not the very sort of legalese or regulatory information that everybody can read, but what effectively it means to be in the UAE, or what considerations there are for everybody to think about. So with that, I think, what's new, this is an important slide for everybody to kind of think about it. COVID-19 obviously has led many firms from across the globe, including a lot of Western European firms, Asia Pac firms, even the US and Canadian firms, to think about moving staff. Generally, there has been a lot of interest coming from individual team members looking to move to the UAE, either for tax purposes or for personal purposes, or because how well the UAE managed the COVID pandemic. So a lot of that has happened now. Obviously, as people know, Dubai, particularly in the UAE, more so than Abu Dhabi. But Dubai has been very good in terms of its infrastructure development, has been doing a good job around attracting people to move here. So the question and the comment that I made earlier about people who want to move here is a function of how people perceive Dubai as a destination. That has led more firms to think about, okay, if you want to place people in the UAE, where do we go? Do we go to Dubai? Do we go to Abu Dhabi? And then also Abu Dhabi is now catching up with that, and Abu Dhabi global market is the financial free zone. And I will come back to this and explain actually what the financial free zones are, what the different regulators are, and how the whole puzzle fits together. It's a little interesting and requires consideration. So just to sort of go over this slide, and then I can jump into the details, is that the Abu Dhabi global market is supported by the Abu Dhabi government. And Abu Dhabi government, as most of the participants will know, has one of the largest or has few large sovereign wealth funds, including Abu Dhabi Investment Authority, Mubadala, ADQ, etc. So there's a lot of liquidity sitting in Abu Dhabi, and that particularly when it comes to fund managers and asset managers becomes a very attractive proposition, and they have been very actively pushing ADGM, which is the financial free zone, as a destination of choice for a lot of companies. In relation to Saudi Arabia, I'll come back to that at the subsequent slides. But putting the UAE into perspective, you have a federation of 7 states which include Dubai and Abu Dhabi. The federal regulator from a capital markets point of view is called the Securities and Commodities Authority, similar to what you would have in the UK as the FCA. And then you have the Bank of England, which manages the banking relationship in PRA. And then the Central Bank of the UAE is the equivalent of the Bank of England when it comes to banking regulations. Then you have two financial free zones, the Dubai International Financial Center. It is a free zone. It is not an offshore jurisdiction. So a lot of times people consider DIFC or Abu Dhabi as a offshore jurisdiction. That is not correct. It is simply a financial free zone. It's not like Jersey or Guernsey in the UK or the Cayman or BVI. It is part of the UAE, but it has its own commercial and civil sort of setup. And then you have in Abu Dhabi, the Abu Dhabi Global Market, which is also a financial free zone. And both financial free zones have a 50-year tax break from a corporate income tax point of view. And there's some complications around that with the new federal tax legislation. We can go into that. But in the beginning, before the federal regulations and the Securities and Commodities Authority was well established, there was a need for attracting asset managers, financial services, capital markets businesses to the UAE. DIFC was the first to lead that. The regulations are well established. They are modeled after the UK FCA regulations. And the Abu Dhabi Global Market has something similar. The key difference basically between the two from a legal point of view is DIFC has codified English law versus ADGM, which has taken English law as is. So there's no interpretation variation when it comes to the Abu Dhabi Global Market. And then the interplay between, and I will let Depo sort of add some detail and mix to this from an ADGM point of view, but coming to the DIFC, it's very important that the full suite of regulatory frameworks are available. So if you want to set up a deposit-taking institution, to an asset manager, to a broker-dealer, or interdealer broker, or a fund manager, or a hedge fund manager, or a money service business, you can do that. However, there are some restrictions in relation to how you do your business with clients outside the financial free zone. There's something called a tolerated practice, which most people deploy. In the DIFC, they have issued law number 5 of 2020, which allows firms to market. So there are some considerations there, but generally the framework is evolving in the DIFC and the federal level and the ADGM. So I'll stop here and I'll ask Depo to shed some light on the Abu Dhabi Global Market.
Yes, thank you very much, Jahanzeb. Depo, yeah, can you?
Yeah, absolutely.
On this, please.
Yeah, absolutely. Thank you, Jahanzeb, and thank you, Cindy. So the ADGM is the Abu Dhabi Global Markets, and the key financial services regulator in Abu Dhabi is the Financial Services Regulatory Authority, known as the FSRA, which was established in 2015. As Jahanzeb has already highlighted, it is governed by the English law, and in place of trying to ensure that there is the attraction of international players to the center, have created what I would deem to be an efficient and cost-effective authorization and establishment process, right? So in ensuring that firms are able to go through a process where in certain other jurisdictions will take considerable time. And I know this from my time probably in Europe, where it potentially will take a year at times to get this process completed. The process is fairly streamlined from engaging the players right at the start through the authorization process into getting what you call the financial services license, and the details around the process we can get into, because I'm sure there'll be plenty of questions as to how long it takes for that process to be completed. With the FSRA, they allow for the domiciliation of funds in the ADGM and non-ADGM funds. So you can be a foreign fund manager in the ADGM as well as establish your domestic funds there. Primarily have three types of funds: your public funds, which is available to retail customers, and as you can imagine, with that comes the more onerous regulatory oversight and regime. The exempt funds, which requires a investor minimum contribution of $50,000, as well as the qualified investor funds, wherein the minimum participation is $500,000. As you can imagine, as with many centers, the same applies to the FSRA, where you have various fund vehicle types, which you can set up. This range from closed-ended funds to open-ended funds, whether you want to have a cell structure, like a protected cell company, you want to have investment trusts, so that the hedge funds, the various type of fund vehicles you can establish. The beauty about the center also is the fact that there are no minimum asset under management requirements or maximum investor restrictions, as you might encounter in other centers. And add to that what I would call really pragmatic reporting requirements. And so, there is aligning the practical and the theory of regulations, and out of that comes the pragmatism around making sure that things are not unnecessarily onerous in the ecosystem. For a company that looks to set up in the ADGM and be supervised by the FSRA, there are certain mandatory roles you are required to have in place. The senior executive officer, which for many of you who are not conversant with the term, is the equivalent of your chief executive officer, and your CO MLRO, which is the compliance officer, and MLRO. In many jurisdictions, these are oftentimes two different individuals, but it's allowed for one individual to hold those two roles. Those two roles critically are held by individuals who are UAE residents. That is, they have the working visa to work in the UAE, not necessarily Emirates, but have the residency to work in the UAE. The last officer that is a mandatory role is the finance officer. But I do highlight that as in the next, before I get into the next point, that we're seeing risk play more of a critical role with fund managers. And so from a purely regulatory perspective as to what is and what is not mandatory, the risk officer isn't a mandatory role, but it also is mandatory to the extent that it is always one of the roles that the FSRA would include when granting you your final license, particularly if you are what we call a category 3C type firm, that is a fund manager. There's slightly different regimes for the fund managers because the venture capital fund manager comes with a slightly more relaxed regime. And again, I'm sure we can get into that as we go through the session or the questions on that. A lot of these functions can be outsourced. So the beauty of the FSRA is it allows you as an entity to focus on your primary or your core activities as a fund manager, and you effectively can outsource your middle and back office functions, which is where service providers like GR1 will come into play. And so we could take the role of a COMLRO, finance officer, and a risk officer. And as Jehazeb has highlighted, I won't go over that again, the fact that you have access to key capital providers like ADIA and ADQ, which he's already spoken about the tax regime. The crypto industry is growing fast, irrespective of the winter we've had in 2022. It continues to be an area we are seeing a lot of interest. And, I think only yesterday in Abu Dhabi, there was a big conference in Hub 71 where investors and players in the ecosystem came together in regards to, again, trying to raise funds for interested entities within the ecosystem. And so the fund manager regime in the ADGM also has some consideration for those who want to play in the crypto space. And, we're seeing an increasing number of global and regional players come to the center. So I think as the market continues to pick up, we continue to see more of a move in that direction.
Thank you very much, Dapo. Thank you very much. It's very interesting, effectively, what you call the beauty of the zone. Many beauties, indeed. Next question would be maybe also for Jehanzeb regarding the KSA regulatory regime in relation of distribution to this. Sorry, in relation to distribution of foreign funds.
Yeah. Thank you, Cindy. I think that's a fantastic question. But before I go into that, I just want to add a couple of things to what Dapo has said and some of the key considerations in relation to how the DIFC, ADGM, and the Securities and Commodities Authority are playing sort of in sort of the regulatory space. Two main considerations here. So the presentation here, I'm just going to move back and forth for people's benefit here. So the focus here is a little bit of fund and asset managers, but also on broker dealers and crypto businesses. Just to give you an idea, the crypto regime particularly has been established in the ADGM since 2018, if I'm not mistaken, and lots of firms have gone into the Abu Dhabi global market with the view of setting up a broker or an MTF or an exchange, etc. There are now fund managers, derivative players in the ADGM when it comes to crypto businesses, broker dealers as well, custody providers, and so on. We are now also seeing a lot of hedge fund managers coming to the DIFC. Private equity managers are also looking to go into DIFC for the reasons I mentioned earlier. And then there is typically, the considerations as to why and you should go into DIFC or Abu Dhabi, or you should consider setting up onshore. I can highlight that very quickly. So typically what happens is that most of the staff or the human resources are looking to live in Dubai, which drives sometimes the decisions of the firms and where to set up, because both DIFC and ADGM are similar in their regulatory approach. So sometimes, and previously that was more of the case in terms of firms looking to come in and setting up in the DIFC. It's a bit more established. The center has been around for a while, and so on and so forth. Recently, because of the capital allocation and because of potential connections with the Abu Dhabi government, all the PE managers, the hedge fund managers are absolutely also considering the Abu Dhabi global market. And then we are seeing a lot more crypto interest in the ADGM as well. There is another regulator called the Virtual Assets Regulatory Authority in Dubai, which has its own dynamics with the Securities and Commodities Regulator. So there's a bit of a hodgepodge here in terms of who covers what and how do you do business with different clients who may be falling in more than one jurisdiction. So if there are any questions, please do ask around that. One of the things that's very, very important, the Securities and Commodities Authority, which is the Federal Capital Markets Regulator, has revised its regulations and has recently published a new funds regime. As well, there is a restriction on marketing funds to retail investors in the UAE, which has recently been announced as well. So there are a lot of considerations here when it comes to setting up your business. If your focus is on retail distribution of funds, you really have to consider the Securities and Commodities Authority's requirements as well. Having said that, I will quickly move to the the Saudi question that Cindy had asked. Again, I think most people will know that Saudi Arabia is the largest player in the Gulf Cooperation Council, has a large population relatively comparing to the other GCC countries. I think it's about over 38, 39 million people, the largest and most liquid stock market, which is Tadawul, and so on. So, and then what has happened recently with the liberalization of policies by the Saudi government, both in terms of basically the female participation in the economy, plus opening up various sectors to foreign investment. There are lots of interest into Saudi Arabia. Again, basically, most of the non-domestic firms, and by non-domestic I mean non-UAE or non-Saudi firms or non-GCC, are looking at where to set up their business, how they can, particularly from an asset management point of view and fund management point of view, where do they need to set up to be able to have a commercially viable business, and which jurisdiction allows them to raise money most efficiently from some of the large players in the region, including the Saudi government, the Public Investment Fund, and related entities, Saudi Arabia, obviously Mubadala, ADIA, and others, and Kuwait Investment Authority or Qatar Investment Authority in those countries. So what is happening recently, and I think there were a lot of announcements made in that context, that if you are dealing with the Saudi government, Saudi government will force you to, or maybe force is not the correct word, will encourage you to set up your regional headquarters in Saudi Arabia. So, so a lot of that is currently happening. Most of the global players that are looking to tap into the liquidity, this is both in terms of the asset management and fund management business, as well as the capital markets trading businesses in terms of equities trading or access to the Saudi market, or giving access to the Saudi clients to global markets. In terms of brokerage, trading, investment banking services, are looking to set up and are in the process of setting up in Saudi Arabia. The interplay, again, is where do we put more resources? How can we make it more efficient? And that is a function of basically priorities, and certain decisions need to be made. There are some hard choices in this respect, whether we set up in Dubai or Abu Dhabi or Saudi Arabia, how to resource different functions where, obviously you're seeing on the screen what are the mandatory roles. So everybody wants substance. So if you want to set up in Saudi Arabia, one of the key things that they would ask for is that you need to have substance in the setup. Gone are those days where you can have one or two people in Saudi, and then you're trying to conduct a lot of business there or substantial volume of transactions. So that unfortunately does not work. And CMA, which is the Capital Market Authority of Saudi Arabia, is keeping a very close eye on who's doing what. So I will stop here. Cindy, are there any other questions?
Yeah, thank you very much. It was very complete. Maybe Dapo wants to add something regarding Saudi Arabia. Do you have something to add for the setting up?
No, I think Jahanzeb has covered the core of what's required in Saudi. So there would be much more at this time for me to add, beyond exactly, taking people's questions. Once we get to that space, there might be things that we have touched upon that requires more clarity, or that we actually haven't touched on, or people have questions on.
Okay. Great. So I think we have 2 questions for the time being.
Okay.
First question. Can you be SEO, to more than one company in ADGM? Or would you need to set up a company in both DIFC and ADGM if you had 2 companies? So it's a question of human means and substance, as you were talking of.
Okay. Dapo, you want to take that?
Yeah, absolutely. I can take that. That is a really interesting question, and we've seen that dynamic play up in several instances. You know, I think for each of the regulators, there is the standard requirement for mind and management to be in each of the ecosystems specific to the question raised here, David, and really interesting question. And the rules are very clear with regards to what the requirement is, which is this SEO needs to be a full-time role in whichever jurisdiction. That is not to say that those discussions do not happen, and we've had several of those where we try and make a justification where we feel that the SEO has the capacity and the competence to undertake both in both jurisdictions. But it is a very difficult ask. If you ask me, it's not one it's commonplace. I haven't seen one that has gone live yet. Maybe Jehanzeb has, but I haven't necessarily seen one.
I can comment on that, right? So typically what the consideration would be if it's a group entity setting up two different firms, one in DIFC, one in ADGM, can we justify having the same person as the CEO, as the senior executive officer, as long as we can sufficiently support that individual with their responsibilities. So that's a conversation that can happen. And I agree with Dapo. I haven't seen that yet being approved. What we have seen being approved is there's an SEO who is also a executive director of another firm within the group or related parties. But we have not seen two senior executive, one person fulfilling two senior executive roles. Hopefully that answers your question.
Thank you. I think the answer is not that easy. Another question. Do you provide outstanding services in Saudi Arabia? So
this is if it's outsourcing services, yes, correct. We do.
What kind of, maybe you can explain to us?
Okay, so in Saudi Arabia, we provide the full suite of services that we do in the Middle East, in Dubai and Abu Dhabi as well, which is outsourced compliance, outsourced finance, outsourced risk managers, payroll, bookkeeping, all that middle and back office stuff that you will need to be operational in Saudi. And we deal with the regulators on a frequent basis, so there's very good regulatory communication between us and both SAMA and the CMA.
Yes, you can help getting the authorizations from the authorities.
That's correct.
Thank you. Thanks a lot. Another question. Is the RHQ rule applicable for financial services company, which means capital market institutions? Maybe you can precise the RHQ. Yeah,
just the regional headquarters. I think that's the that's the abbreviation there. So excellent question. Basically, I think the way the announcements were made and the rules are written is that if you want to deal with governments, entities, and bid for government contracts, then you have to have a regional headquarter in Saudi Arabia. Now, the interpretation of that is very loose currently. And as you would expect, if there's a need, that there will be an exemption provided. And there are some exemptions, if I remember correctly, that if you are the only bidder, then obviously you're exempt. But for doing business in Saudi Arabia with non-government entities does not put you into that bucket of having to set up a regional headquarter. However, if majority of your business is dealing with public investment fund and public investment fund entities, potentially you may be forced, or I should not use the word forced, encouraged to set up a regional headquarter. Hopefully that answers your question.
Yes, the guy asked if there were where they can find more details on that.
Yeah, we
Maybe
can
I'm not-
provide, if you can share your details with us at info@J1 Partners, or send it to Aisha at AISHA@J1 Partners, then we can definitely come back to you with details on that.
Thank you. Another question. For VC investment management CMIs, where funds are registered in Cayman, are we expected to register the fund for local distribution?
Okay, excellent question. By local distribution, if you're referring to the UAE onshore market, and if you're talking about retail investors, there is now a prohibition on selling foreign funds to UAE retail investors. But if you sell it to professional investors via private placement, that is still possible.
So you need to register.
You need to, yes, for
locally.
professional investors, yes, professional investors, but through a private placement.
Mm.
No approval required, but registrations, yes.
Okay. Any insight about upcoming free zones that doesn't require the global operations to be based in Saudi Arabia?
Excellent question. There has been long-standing discussions around the King Abdullah Financial Center, which is in Riyadh. You'll see a lot of very tall buildings in the main sort of King Fahd Road in Riyadh. However, nothing has come out from a legal standpoint around that. There has always been discussions that King Abdullah Financial Center will be similar to the DIFC or the ADGM. But we're still waiting to hear on how that will be structured. Although with the recent changes, probably it is more likely to happen now than ever before.
Thank you.
There are some other free zones, but they're not financial free zones in Saudi. They're more industrial.
Okay.
Part of the discussion today.
So, do you need to use a locally licensed company to market foreign funds in the UAE and Saudi Arabia for foreign funds?
Okay, so I will answer for Saudi Arabia first. If you are marketing foreign funds, there are two things that can happen. One is on a fly-in, fly-out basis, on a cross-border basis. So there are firms that we know that are still not set up in Saudi Arabia who are selling non-Saudi funds to Saudi institutional investors generally on a fly-in, fly-out basis. However, there's a strong encouragement by the Capital Markets Authority to stop that activity. And there is potential regulatory and legal risk that people now take when they're doing business on a cross-border basis only. And that's a function of the risk appetite of the institution, how they want to go about those transactions. Secondly, there are very simple restrictions in Saudi capital markets regulations that if you want to sell foreign funds, you have to be licensed as a fund manager in Saudi Arabia, or you have to go through a licensed fund manager in Saudi Arabia, which is, there are two types of, actually I can quickly move to the Saudi slide. There are two types of general fund management licenses. There's an asset management license and there's a fund management license, to keep it simple. The fund management license does not allow for any outsourcing to happen. This is what typically is referred to as the big fund management license. And if you are selling foreign funds into Saudi Arabia, you will be required to either get that license, or you have to contract with an entity that is licensed for promoting foreign funds. Generally, in the case of for large institutions that are looking to go to Saudi Arabia, partnering with a local distributor is typically not the route we have seen taken. Most firms either prefer to do business on a cross-border basis or establish their own presence. And as far as UAE is concerned, the retail distribution has gone through a prohibition, which was recently published. But if you are selling to qualified investors, then you can do that through a private placement. Hopefully that answers your question.
Thank you. I think it's complete. There is a question regarding raising capital from both UAE and KSA investors for early stages, starts up and scales up. Can you give key considerations for raising capital?
Yeah, Dapo, do you want to take the Abu Dhabi one, and then I can take the Saudi one?
Yeah, sure. So key considerations for raising capital is, starting point is always having a very clear business model in terms of what it is you seek to achieve. Clearly, we're trying to raise funds anywhere. Oftentimes the starting point is always track record. I know it's very for a startup there isn't that record per se, but it's articulating what the potential is for doing that. And we do see a lot of startups as a consequence of that, also trying to leverage the regulatory framework, which gives the confidence to potential investors who have that, who take comfort in the center in which a lot of these startups are being set up, because there's recourse, and then we've talked about the legal framework within the centers that allows or gives that additional comfort to potential investors.
Yeah, and I think if I may add something here. So if you're raising money, there are two ways of doing that. Either you have a strong relationship with the investors in the region, which means that they will give you the money regardless of whether you are based in Dubai, Abu Dhabi, or Saudi Arabia, which is becoming less of a case now than before. And then two, if you want to basically be a VC, venture capital fund manager, or raise money for VC investments, that you set up as a venture capital fund manager in Dubai, Abu Dhabi, or in Saudi Arabia, which then basically is being supported quite a lot by the governments in the two countries. I think this is also happening in Qatar quite a bit now, not so much in Kuwait. But Saudi Arabia and UAE are definitely supporting a lot of fintech VC type investments. So the option is either we do it on a cross-border basis because we have strong relationships and a strong track record. So, for example, Sequoia or type VCs probably are not here because they can still source capital. However, some of the smaller startup ones have to be here to get that credibility that Dapo was referring to.
If I might just add one more thing specific to the ADGM, I think is the essence for which centers like Hub 71 were created and supported by Abu Dhabi Inc., right? To create that ecosystem for startups and allows both sides to engage, talk about projects, see how those projects develop into a space where collectively they have a better understanding of what the prospect and potential are. So there is that framework, that ecosystem that allows both parties to meet pretty early on in the process.
And I think one more thing I want to add here for the DIFC bit, that's very, very important. DIFC have a DIFC FinTech Hive, which has been very active and very supportive of lots of fintech companies. And there is a DIFC actual fund, I think that manages 100 million currently, mostly focused on VC investments. And there are lots of other incubators, Dubai government-based, that are supporting VC investments in different areas. So again, it comes down to simply a choice. If you want to raise money and come down and establish either in the UAE or in Saudi Arabia, the question becomes of what do we require? Do we require capital and we don't have a track record, or we have a track record and we require capital, or we have both, but we want to either source transactions or fintech firms out of here, or we source capital for fintech firms globally. So, and based on those and that analysis, actually, you can sort of come to a conclusion that gets you probably in the right box.
Thank you both. Another question regarding the outsourcing part. As you have explained, it seemed very extensive, and there is a question asking, whereas these companies like yours that provide these services, outsourcing services, needs to be regulated or not in the region, because for example, in Luxembourg they are regulated, and so the question is for you.
Yes.
How is it happening?
Yes. So very interesting question, and I don't have a straightforward answer. In the DIFC, you don't have to be regulated. You can act as a service provider. In the ADGM, you are likely to be regulated as a designated non-financial business. In Saudi Arabia, if you want to provide outsourcing services, there are some restrictions. So either a law firm or a CMA authorized firm or a accounting firm that is registered with the Saudi accounting body are the people who can provide outsourcing services. So so there are some complications there, but that's what the jurisdictions bring in terms of challenge.
Thank you. That's perfect. There is a question on property crowdfunding license. What are the differences between ADGM and DFSA for this activity, and which is more practical and easy to get as license?
So property crowdfunding generally is typically only allowed in the DIFC, not in the ADGM. There are discussions around setting up a private financing platform which focuses on real estate and structuring in a way which, in our view, doesn't really squarely fit with what the intention of that particular regime is. So you only have really have the DIFC, where there are a couple of real estate platforms. How long does it take? It can take, depending on your technology and how ready you are from a technological standpoint, it can take between 6 to 12 months. There are discussions. They won't, because you're dealing with potentially retail investors, as obviously crowdfunding is meant to be. You won't be generally allowed to outsource the key functions. So the cost then goes up because you have to have full-time staff. And the process needs to be clearly explained. So they would, the regulator would want to see some demonstrations of the technology, the key use cases, and then obviously that has to be supported by the systems and controls documentation and people.
Thank you. A question. Are you able to briefly cover the interplay between becoming regulated as a FS institution in either ADGM or DIFC directly onshore with the central bank? Can you help the person?
Yeah, so I think we can. We have excellent relationships with all the regulators, including the central bank and the Securities and Commodities Authority. It really depends. I'll give you a couple of examples in terms of where some businesses need to look at the central bank, some businesses need to look at the DIFC, ADGM, et cetera. So if you are, for example, looking at in the payments business, money services business, if you're looking at a stored value facility offering cards and stored value wallets to retail clients, then from a regulatory point of view, and this can be a controversial comment here, the central bank license is probably the best option from a regulatory cover point of view. There are some challenges both with the ADGM and the DIFC for various reasons, because both the jurisdictions, which I should have mentioned earlier, were meant to be wholesale jurisdictions, not retail jurisdictions. DIFC has kind of morphed into a hybrid, and ADGM is in the process of morphing a bit into a hybrid, but the intention has always been for those jurisdictions to be wholesale jurisdictions, not retail. But when it comes to central bank, if you have a deposit-taking institution like a bank that you want to set up that wants to do with retail, the only way you can do that, which is very, very difficult, is to get a central bank license. And they're not giving away commercial licenses, commercial banking licenses. Specialized banking licenses are still available, but again, require quite a large amount of capital. If you are a broker-dealer, and there are a few right now that are in the CFD FX space, the Securities and Commodities Authority have authorized those, which is the onshore regulator. And the option people have chosen is because they want to focus on retail and onshore, and that business is considered a bit high risk. So therefore, they want to not take any regulatory risk. There are firms, however, who are operating out of the DIFC, who offer FX, CFD, and sort of retail derivatives to clients. But they have done their risk analysis in terms of how they're operating. And there are a couple, if I believe, in the ADGM. Interestingly enough, in Saudi Arabia, there are local institutions that some of them do provide that, but it's not a very common business to have CFDs and FX firms in Saudi. They have typical sort of broker dealers that provide equity, listed equity trading capabilities, and generally retail is not allowed to do derivatives in Saudi.
Very clear. Thank you very much. A question in KSA for funds, 100% local underlying assets.
Mm-hmm.
Can we outsource fund admin operations to be conducted offshore? And also, what about GCC funds, including KSA underlying assets?
Sorry, you have to repeat the question again, Cindy, sorry.
Sorry. In KSA,
Mm-hmm.
for funds, 100% local underlying assets.
Mm-hmm.
Can we outsource fund administration and operations to be conducted offshore?
That's an excellent question. Unfortunately, I do not know the answer to that question, but
Okay.
we will.
It's very
The
specific.
person who is asking that question, if we can make a note of that,
Okay.
my colleague Aisha will take a note of that, and we will come back to you with an answer on that.
Thank you. At least one, you don't have the answer.
I don't have the answers to many questions.
I think we covered most of them, most of the questions.
Okay, wonderful. And if you allow me, I think there are a couple of closing remarks here.
Sure.
In terms of the fund management, asset management business, most people's focus in the region has been capital raising for a very long time. And that has shifted over the years, particularly first with the DIFC and now with the ADGM and also Saudi Arabia, where the incentives are given to set up operating entities in these jurisdictions, Initially, people have set up capital raising entities. So still some of the firms come in and they set up regulated entities, but those are more cap intro, cap raising type entities, not actual asset management or fund management businesses. That is now again changing. I think this is public news now. The Brevin Howard is going to put in 100 people in Abu Dhabi, etc. So there's definitely a shift in the process for capital markets businesses, particularly when it comes to interdealer brokers. The DIFC has always been a good place. So you have EDF Man and ICAP and Marge O'Brien's and some of the other larger ones operating in the DIFC. They're not in Abu Dhabi. A lot of the big global names like Morgan Stanley and Goldman and JP Morgan and so on, they all operate out of the DIFC, not currently in the ADGM, although some may have a smaller presence there. Everybody has a presence generally. When it comes to large institutions in Saudi Arabia, this is the tier 1 bulge bracket investment banking houses, including Deutsche, Morgan, Goldman, JP, and CS, etc. The private equity shops are opening up in Saudi Arabia for obvious reasons, for capital raising purposes. Same thing goes with anybody who wants exposure to retail equities trading business. They are setting up in Saudi Arabia. So the key challenges from a regulatory point of view, and this is generally the advice that we give to most of our clients and people who are interested in hearing this, is to be very clear on the immediate, medium, and long-term strategy. And sometimes that strategy can be very simple, which says that I just want to raise money from the region and I don't want to do anything else. How can I do this? It's a very different sort of thought process, and becomes a function of many other things, including where are your people, where do they want to live, how do they want to operate, what reliance are you going to place on your larger mothership, et cetera, et cetera. So the considerations are not as obvious. There are lots of things that are not written down and need to be understood and put in context for the correct decisions to be made. So this is where understanding of the region is very, very important. And you know, the final message I'll leave everybody with is that there have been a lot of resistance towards putting substance, because the previous modus operandi in the region was simply we come in, fly in, and we fly out, and so on and so forth. And why do we want to set up here when we can still get a check from ADIA or the public investment funds, or an investment from them, or whatever have you. So that is definitely changing. And we have been very clearly sort of told it is changing, and we have seen evidence of that. So please, if you are considering a presence in the Middle East, it's very, very important to have a proper mapping exercise of what you want to accomplish and which jurisdictions will fit your objectives. There are many different ways of going about the same thing, but we have seen that sometimes decisions are made based on very immediate needs, and then the cost of unbinding those decisions for the medium-term needs or long-term needs are quite significant, unnecessary. So with that, I'll finish. Dapo, do you want to add anything?
No, I'll just reiterate that the region, you know, there's a very clear emphasis, and I kind of look at ADGM selfishly in this instance, where, you know, you almost describe it as a Hong Kong right now 30 years ago, right? And there is that increased drive in the center to grow that significantly. And so, you know, for those who look into the region, again, I know it's across centers here. It's a really interesting time to be in the region and experience the growth.
Thank you very much, both of you, Jahanzeb, Dapo. Thank you very much for giving us all this interesting information and inviting us to anticipate in the project of establishing an activity, a financial activity in the Middle East. I think you've answered globally the main questions we may have. There are many, many other questions, and I know you're here to help. Thank you very much. And thank to all the participants for your interesting questions and your participation. Hope to see you in another, maybe another session to go more in details in a specific point. And
Thank you very
I
much,
wish,
Cindy.
thank you. I
Thank
wish
you,
you a
Cindy.
very,
Thanks,
very
everyone.
good evening. Thanks. Thank you very much. See you.
Take care. Thanks everybody for attending.
you.
Really appreciate that. Thank you. Bye-bye.
Take care. Bye-bye.